Good morning, everyone. Welcome to today's session of the market snapshots. I hope you're all doing well, and I'd like to welcome you from the weekend and your festivities. For those that had them yesterday, and for those in Uganda who are having a public holiday today as well. So, in just a minute, we're going to be diving into our agenda for that day. I'd like to remind you that this is not financial advice. So you can feel free to use this to supplement your analysis or to aid you in your trading through that day as well. So just a minute or two and you get some more to join up, then we can get underway. So of course, we started, we're going to start by looking at our economic calendar and see what news events we have going into that day or through the week as well. Then we can later on dive into our technical analysis and be able to see where the opportunities for today or the day will be lying, or you can be able to get something for that day as well. Just get my screen up in a bit. All right, so today is Tuesday, June 3rd, and the news events that we have for the day, we can see we did have the monetary policy meeting from the Australian dollar. That was early in the morning at 4:30 a.m. We also did have CHF for the Swiss franc with the CPI that came in, and we saw it steady at 0.1%. That was just as forecasted. We similarly do have JPY, Bank of Japan Governor Ueda was set to speak at 10:50 a.m. And you can see with a green marker over here, that means it's actually ongoing. Then 12 p.m. we do have the co-op CPI flash estimates for the euro, the CPI flash estimate year on year. Then we have the monetary policy report hearings at 12:15. So we have a series of events that's happening one now, and in between now and 1 p.m. we do have a lot happening in the Eurozone and of course the GDP as well. Then later in the evening, I think the main event for the day will be the JOLTS job openings, because as we all know, this week on Friday we shall be having the unemployment claims as coming out, or the non-farm payrolls as well. So the unemployment claims on Thursday, then non-farm payrolls coming out on Friday, as well as the unemployment rates, which will be the main focus for the week. So the JOLTS openings will be very, very important, because they are one of the factors that can try to show us what is most likely going to come out of the unemployment rate and non-farm payrolls this Friday. So this will be very important at 5 p.m. So you want to watch out for this. This basically shows how many jobs have actually been advertised as available in the American economy within a given month. So we can say the forecast is 7.11 million jobs that are estimated to have been advertised, which will be a drop from 7.19 million jobs that were advertised in the previous month. So of course, when these jobs have been advertised, that most likely means that fewer people are going to be consumed into the job market, which may not be very good in case the figure is less for the economy in terms of labor statistics. So a stronger figure than the forecast, and as well stronger than the previous, that will forecast that many jobs have been created and advertised in the US, which will be positive in terms of the unemployment figure or unemployment rate that will be coming out later on Friday. So that's, we shall be paying attention here a lot on the JOLTS job openings, because it will be a major mover for us. Also be a major you can be able to encounter our Friday news events that will be coming up. So away from that, as we all know, our gold did take a dip yesterday, and as you know, the dip was very aggressive, especially coming out of last week, the weekend's events. We did see Trump come out and accuse China of actually violating the trade deal that had come in when it came to the pause. And on top of that, China later on came out yesterday morning and also said that America violated that deal at the same time. So that's a tricky situation for the US dollars. So that tariffs, and usually they don't motivate investors to invest in certain currencies. So they tend to go into certain currencies. So we saw gold hitting up, going close to the previous high that had created, I think, a week or two ago. We saw it pushing all the way up, and similarly saw the DXY or the dollar index dropping, going almost its lowest points that it achieved this year in Donald Trump's presidency. Similarly, on the China side, we see that the Shanghai Composite rose by 0.43%, close to 3,362, while the Shenzhen component gained 0.16% to 10,052 in the post-holiday trade on Tuesday, recouping losses from the previous session. So there are some news events that came out that we have been seeing from yesterday morning as well, that were very positive for the China index itself and their stock market as well. But we have seen it recovering early this morning, as you can see in this news event coming up. So besides that, all the focus this week is going to be entirely on unemployment, especially for the other thing that we want to look at will be what's coming out of Japan. As you can see, we understand that right now the Bank of Japan governor is actually in a speech, and a few things may mention may actually trigger the JPY index a certain way or push a certain way. So you want to be very careful for anybody that's trading the JPY, especially right now. Should be very crucial with that. So besides that, let's see what other news events. All this could be around Bank of Japan, but this was before he began speaking. So we want to watch it until it's probably done with his speech. Then we can see how the market's going to react thereafter from there. So besides that, we don't have any other big major news events. Let me move that day yet or any breaking news. Let me just have a look at this and see if we can have one headline that may want to move the markets a little bit. So in terms of macros, as I said, that there's no major big news event that may really want to move the forex markets that much as of now. Also a transport roundup, yeah. So from here, I think we can now go ahead and start looking at what the charts are giving us. They can rely on our technicals. Let me just get on to probably be able to share my other screen. All right, so now coming onto the technical side, let's try to see what opportunities can lie ahead of the market day as far as the technicals are concerned. So I think let's go for the dollar index. So that dollar index here, let's start from the 1 month, sorry, the daily time frame. So we did see that drop that came in yesterday. It came in very aggressively in the dollar index as well. As you can see, the previous lows were over here. These are the previous lows we were having, and it's pushing all the way down here. So technically, when you look at this, with this that momentum is so high, and can expect that price going to trace to the upside into today's New York session most probably, and then later on price lower. So we're looking for levels where that retracement can probably end. Let's have some kind of supply and demand levels that we can be able to watch out for in terms of structure. So we can see we have a very free range all through this area here. So we want to watch an area probably at this level because it's the next supply level we are having. This level we want to watch, probably be able to get a retracement to this area, then a push to the downside to continue this downtrend that you can see price is trying to formulate at the moment. So we can see the price has slightly taken out these highs. So and then you have bullish momentum coming in from here. And this on 1 hour time frame. So you can even be able to see price push above to these areas here and probably continue the move to the downside when you look at that area or that supply zone, you realize it aligns with a 4-hour time frame as well, meaning it's probably a high probability area because it does align with 2 time frames, which is actually a good sign. So you can even see price push into this area, then later move lower and to the downside and probably continue and move to the downside. Now this is the dollar index as well. And this on the other hand, in case you want to have something less than 1 hour, you could have had something of this nature, like a trend line. So yeah, we have some kind of trend line break, but then the supply level to support this area will still be above here. So you wouldn't want to rely on that breakouts, push the upside. Price will have to break above this area, then we test in order for it to give us a good breakout of the trend line. So for now, you don't want to rely on that because the supply level is actually up here. And even if you are to consider it as a resistance level, you would have this. When you look at the rejection you're seeing from here, support, tries to hold, price breaks below it, to expect price to come and test this area. Now, this one of the tricks can always do when it comes to trend line trading. We tend to sometimes what they call false breakouts. Price will break out of an area, then come back into that trend line. And these are some of the reasons to us why the confluences don't tend to align. So you can see this. We do have this level over here. The price failed to break multiple times, and right now, price broke below it aggressively with high momentum. That's an impulsive move. So you can expect a correction move towards this area, then price continues to the downside. Now, this is the dollar index. And as you all know, that when the dollar index is buying, you're looking to short pairs like gold, GBP USD, Euro USD, or pairs that are put as XXX USD. And when it's actually, and then pairs that are the other way around, USD XXX or USD JPY, USD CAD, USD ZAR. Those ones you want to buy them when the DXY is buying. And of course, it's inversely proportional. So when it's selling, you want to buy GBP USD, Euro USD, NZD USD, and then short pairs like USD JPY, USD CAD. So it's inversely proportional to those pairs based on how they are created or aligned. So now when you come to this is now what we have on gold. So let me just change up the template so that we can have some separators for some period separators. So let's start it with a daily time frame as well. Let's try and see what we can get out of this. So this is now gold on a daily time frame. And when you look at it clearly, you can see from the bottom, price is trying to give us some kind of trend line on the daily time frame. And you can see this an impulsive move to the upside. And it's trying to push all the way to the previous height that we had. We have 2 intermediate heights above there, then all-time high at about 3,500. Then we have this high at about 3,459. And well, it's at 3,3. Yeah, at 3,435.06. So the highs we are kind of looking at. So can expect some adjustment to the downside, and then probably a push to the upside when price approaches either the demand level here or the trend line as well. Remember, this is a daily time frame as well. So you do have this demand level on the daily, and you can have that trend line that's trying to push out from that same area as well. Now, when you look at the trend line breakout in this area, you will set it as the highest point price formed. We have a second point. Now, here we have a proper breakout, because you can see the breakout level is trying to align with this demand level as well, right? So now you can decide to use either this trend line to support from below, or you can use this resistance area as well. Or if you're good at pattern trading, you can just decide to have the triangular pattern there. And you know that the price breaks out to one side with confluences, it's going to have a retest and push to the upside as well. So it's an impulsive move, which is a very good sign. The price is going to look for retracement and then probably continue the move to the upside. Now, this is what we are seeing on gold. So let me just go now to a lower time frame. So this is on 1 hour, and so these moves were pretty impulsive. They were very impulsive. So we want to look for a lower time frame area. So right now, where we are, I think I spoke of similar zones last week, and I spoke them as areas that we call aligned areas. I'm trying to look at some kind of price action that occurs in such an area like this. So you see how these candles have been done. There is no imbalance between them. So usually on lower time frames, you tend to find some kind of small areas here of support or resistance or just demand levels when you come to lower time frames. And usually they can offer retracements or they can continue a trend based on how price reacts to them. So when you come to the 30 minutes, you can start to have a full demand level over here. The price happens to be respecting right now as I speak. So price is trying to push this area here. So what we would love to see on this 30-minute time frame, because we are still very bullish on this gold pair as well, we would like to see a break above this resistance level. Then probably, let me look at the 1 hour as well. So now I realize that here, there are not any serious demand levels, supply levels, sorry, that may push price to the downside. But in the lower time frame, we have those that can offer some kinds of retracement. So the preference we will have is for price probably, let me see this, break above this area and probably go all the way to the next supply level up over here. This would be our target supply level. Once price can break and close above this area, then you can hope to see a small retracement. Then I'll push to this area here where you can look take another decision in case you'll be considering to take some sells. But remember, nonetheless, if price decides that can break above this area, then it has a free range to the downside. When you look at this range here, now this one of the ways you can always be able to select your trades or the quality of the trades you're going to take. When you look at a free range like this, you want to be able to measure how big this free range is. Now, when you look at this is about 381 pips, which is a lot of pips, right? So when you look at this range, that means if price is able to break below these areas here, it can give you multiple opportunities or multiple structure areas. You can be able to capitalize a few pips. So within these 81 pips, you don't need to take all of them. All you know that when price breaks below this area, it's going to look to fill up the whole of this imbalance. And that means here you can easily get a good trade or some good pips at the end of the day, probably 50 to 100 pips just on this push in case price is able to break to the downside from there. Now, this is how you can be able to take your trade selections. Now, mostly when you compare and see, you realize that the move to the upside, if price breaks out from here, has a bit of fewer pips. So it's around 183 pips. So someone will be more comfortable say that, I want to look for a trade if price happens to break below because I have a bigger range to the downside than to the upside. So it's easier to make more opportunities when price gives you a very big range than when it gives you a limited space. So here, someone also said and say if price comes above here and breaks above, is going to look for a trade because usually above this area here, what we have is mostly almost a free range because the price action we shall be looking at is really very far behind, and price will be looking at the highs all the way up here at about 3. So it's at about what level here? What price is this? At about 3.4, 3.6, and of course the range above that high to that area is also very big. That means you can be able to get good opportunities around here, almost 400 pips. That means if price can give you a solid breakout to this upper side, you have a bigger range to be able to capitalize on as well. So you can wait for price to break above that side or to break to the downside because it's where we have good ranges that can be able to capitalize on. So that's one of the ways you can be able to approach such particular areas as well when you're doing what they call trade selection or selecting the best possible area as well. So that's on gold. That's on gold, as you can see that. So now let's look at something to do with our Euro USD. So for those of you that want to use the laptop computers and connect your accounts as well, and also see how you can customize the charts to different templates or different preferences. Personally, I have multiple ones that I tend to use here, depending on sometimes even the day. Sometimes you just wake up and you feel like you want the chart to look a bit different when you're going to do analysis. So there's that as well that you can be able to do. The video is up on YouTube, so feel free to go and check it out as well. For those of you that would like to do that, of course. So now let's come to the Euro USD as well, or the European dollar, the European currency, the US dollar. Let me just work on change this for a minute. So fix 1. So now on the euro, this is still on the daily time frame. So you realize most of these structures are trying to give us a similar kind of daily. Some of these pairs try to give us the similar kind of daily candlesticks. You come and look at this, we're seeing the same thing happening on many of the pairs. We see it on gold, even the dollar index looks like the same exact thing as well. So here what you can see that of course price pushed at the upside yesterday, just like on the previous two pairs we have seen. When I push to the upside with a good break and close above that area, leaving us with a demand level right below that we want to pay attention to on these pairs as well. Giving us a demand level over there. That's responsible for the breakouts on this impulsive move. So going down to a lower time frame, you can be able to look at something on the 4H and see. So we have this level here, it does align as well with our areas that you are seeing below here. So you can be able to refine our demand level, most probably to these areas like that, and probably just see if price can push the downside into these areas, then probably give us a confirmation and then push the upside. Don't forget that the best option for you will always be to take a confirmation trade. That is very, very important if you want to take a confirmation trade. Confirmations can be confluences, they can be structure patterns, they can be candlestick patterns. It depends on what you're comfortable with and what you're good at as well. So you can choose from the varieties and wait for those that appear and probably take the trade as well. So anything beyond that, you don't take a buy around this demand level of confirmation. And the other option we can look at is probably price. Do you have a good range to the downside? It's on a 4-hour time frame. Do you have a good range to the downside? So the range is not so good because we have this full long wick, and the next demand level is just slightly below that area there. It's exactly slightly below that area over here. So the range here would have been good if price breaks out on the daily candlestick. That means this daily candlestick would have to engulf all this, then probably retest and then sell to the downside into these demand levels. But that looks like something that's very unlikely because you can see price came from the low, a high, a higher low, higher high, higher low, higher high, then came and tried to wash out this low here, but then closed aggressively bullish. Then I close it and gives us a break of structure from here, forming a new higher high. And that's only when I'm looking at the price option on this leg over here, just around this price option. We have the high, the low, the high, the low, the high. This low tries to wash out but fails to close below that candlestick. So it consequently pushes to the upside and gives us a break of structure. Also taking out the high that we're having over here. And you see the impulse was very, very high. So we'll be looking for price to give us those retracements into those demand levels where you can be able to try to confirm some buy opportunities. Of course, I've said anything below this would be a breakout, then a retest, then a push to the downside as well. So you can refine this level here on the 1 hour to a fresh level. And this is the fresh level that we are having on the 1H, where we would like to take our buys because beyond that, we have no fresh levels until price gets to the areas that are way below here. But you can now later on look on in case the areas above probably fail to hold price or to give us a confirmation for the buy opportunities. So that's as far as USD is concerned. So now let's look at let's look a bit at USD JPY. USD JPY, just get my settings on this as well. So let's start again from the daily as well to get a much sharper picture that you can be able to use to capitalize as well. So we did say that USD JPY was having some bit of correction that ended a few days ago. That was probably from around Wednesday last week, Thursday and Friday, and it was very bearish. And as you can see, yesterday as well, Monday was very, very bearish, aggressively bearish. Then they began already and tried to push the upside, but you're seeing a rejection that has come in just between the first two sessions we have had through that day. So let's try and send the lower time frames if the bearish narrative can be able to give us areas that we can pay attention to try and probably see if we can partake in the sales that are occurring within these areas here. Currently, based on the price action we are seeing over here, you can see that price on the 1 hour did try to give us a shift from here. We had this breakout of this small area here. So you can see it on a line chart, there's some kind of like a king or an arc, meaning that there was some kind of intermediate high or a small high there. The price broke above, then we had this area as well. That price would close and impulsively above. Like I said, these are impulsive moves that price gave us. And right now, price trying to give us what they call a confirmation type of retracement or a correction. Some people call it a correction, some people just call it a retracement. So usually those things are seen basically on how price is moving back into an area or towards a demand or supply level area price coming to. If price comes that kind of way towards any kind of demand level, we call it a correction, and most likely price is going to get to the demand levels and then bite the upside as you can see from here. And you can see price is still rejecting. So you can easily expect that price can push to the upside all the way to the next fresh levels. That will probably be the area above here where we want to take our next decision, or that will be our next decision level. And once again, you can use the range theory, right? So here on our time frame, for us to be able to confirm that price is going to buy to that area, we need a small 1 hour intermediate high probably be taken out as well. And as you can see, price has created one over here. So a breakout of this area will mean price going into a bullish movement that can push us all the way to that upside. This being GBP JPY, you look at the range from this high. If we look at the range from this high to this area here, there are about 64 pips, of which for a pair like USD JPY, that's a very good movement that you can be able to capitalize on the next fresh level. Now, anything below that, or alternatively, what will happen, because you know you're in a bearish trend, so you wouldn't want to really take the buys to this area. You better wait for price to push this area and try to price in some sells to try and see if we can continue with that trend. And in fact, actually, based on the price action I'm seeing here, price did try to accumulate for a while, give us a manipulation, a very quick manipulation above these highs. You see that? With that kind of accumulation, price failed to break below, price rejected, then came and pushed to the upside, then later on pushes to the upside. So this would be the area I want to target to be able to take the best possible sells. But just in case price doesn't get to there, remember the market can be decided by us. So we can just be able to react to particular movements that the market gives us. We have this low here that once the price break out of, give us a retracement, of course, then wait for a confirmation, try and push the sells to the downside. So this is one thing you want to watch out on USD JPY. If we get those buys, a break above that intermediate high on the 15, was on the 15, yes it was. Intermediate high on the 15, a break above, we have a range of about 64 pips. Now maybe a bit bigger because we have been able to refine our target area. We're about that. This will be close to 93 pips. So you can see a push to that side. When you see if I close below this level here, we'll push us all the way to the downside. Probably taking out all these lows here and seeing if USD JPY may create new lows. Probably since April. Yeah, since April, I guess. This will be the lowest point we have reached. If price pushes down there, there's almost a free range. The price can up only until these levels here, which is a very good distance for it to be in a trade as well. So that's as far as USD JPY is concerned. So let's move on a little further. Let's look at some more currency pairs. Then we shall end with the synthetics. So remember the indices. Synthetics are a bit entirely different. Customize this. Coming into GBP CAD, the price action is a bit so rough, so complicated, but we can see the price did give us a breakout out of these areas here. I spoke about last week, I believe. Then now price has been giving us this kind of retracement that we saw coming yesterday back into those areas above all the premium levels, where then you can see price may want to sell to the downside. So personally, when I look at this kind of price action, we did have this this consolidation that happened over here, and then price breaks out of it, then retests this area and pushes to the downside. Now, when it's pushing to the downside, price does leave us a supply level over here. Then I would really love to see price come back to. Though right now we are seeing some kind of reaction of this support to resistance flip area. Basically, support to resistance means this area was support up to this week here. So this is how I mark them out up to the week. To a support level, then price breaks out of it aggressively and then becomes a resistance level. And you can see how price is reacting to that particular area. But personally, when I'm looking at the kind of price action that price was forming, it's a correction move, but I believe price can still go higher into these levels, to the supply level, and then go to the downside. So basically what I'm looking at is the push to the downside is only just coming to liquidate these demand levels here you're seeing. That would be my best possible solution. Price coming to liquidate here, then now push us to this area or our extreme levels where we want to take our proper sales. So this would be the most important area on my side that I would want to watch. So as far as this area is concerned, just in case price happens to come with high momentum and break below it, then sentiment would have gone back to the general higher time frame sentiment, which will be bearish. So we shall see a retracement back into those levels, then eventually a push to the downside. That's when the price able to break here aggressively and then continue below that area to something like this. There should be a candlestick closure below these levels here, then a recent retracement or correction move, then a push to the downside. But if price comes in here and confirms buys, then you can see it come and liquidate these extreme levels. So this is what we shall be looking at on JPY CAD. In the meantime, I would like to remind, if you do have some questions, feel free to drop them in the comment section. Then I'll get to them in the last section of today's market snapshot. So I'll try to get them and answer those questions or see what you have to tell us as well. So this is it for JPY CAD. This is my anticipation and my outlook, and something I'm going to be watching out for throughout the day as well. So now coming to USD CHF, what do we have as far as USD CHF is concerned? For those of you that may not know USD CHF, it stands for the US dollar against the Swiss franc. And for those of you that don't know the Swiss franc very much, it's now not just an emerging currency anymore, it's actually now a solid currency, basically based on the good tax policies that are in Switzerland. And you might have realized very many millionaires tend to want to have their accounts or their business running in Switzerland. So as you can see with this, price gave us an impulsive move 2 weeks ago, or the last week but one, we had this impulsive move and we had a demand level that was responsible for that impulsive move, which was this. And you can see price came in and tapped into this demand level. So usually what happens when price taps into a demand level and the price action or under the consumption, so the liquidity has been taken out, which has been mitigated, we call it a consumption. So price only tapped into this demand level, didn't go at least 50% of it. Sometimes most likely that price may come back into this area to take the lower time frame, demand levels or the refinements, then later continue to the downside. So what I would like to do with that is go to the 1 hour time frame. Sometimes the 4 hour, but 1 hour will work very perfectly well. So you can come to the 1 hour time frame and then you come and look at that level there. Are there any demand levels price might want to come back to and probably mitigate? So when you look at this, what do we see? We do certainly have one demand level above here that the price can easily want to come back and mitigate. Now that's the area of interest you want to be watching for. The price might easily come back and then liquidate that. But why would you focus on that and why would you expect price to do that? Because after the impulsive move, of course, you'd expect a retracement to be in that kind of formula where it's kind of like a consolidation moving towards the area that we call a correction move. But then even after price tapped onto this area, it's only tapped slightly, not even 50%, just like a percentage, like 1%. But then even price was pushing to the downside, like as if it's correcting, like as if it's in a correction move, or it hasn't got enough momentum, or it hasn't picked up enough liquidity from the area above. So what happens is that price is probably going to push to a lower area on the next time frame or a next demand level area, which is something like this. We want price to come to this probably this demand area here, and then use it to push price all the way to the extreme supply level. Then now from there you can expect price to eventually now go down and continue the downtrend or give us an impulsive move. But now we do that because this over here is also a correction, move to the downside. And if we get the same correction, move to the upside. So this shows you are losing momentum or you don't have enough sellers yet to push the paper. So most likely price may come back to the extreme level that has been preserved or liquidity conveying. Price keeps it there, and when it fails to pick up enough liquidity, it may just accelerate towards that area and then trigger it and then push the downside. So as far as USD CHF, we can expect that to happen. Right now we're seeing some small intermediate buys, but as you can see on the forward, there's a small supply level that may continue to push price into our good demand level that we want over here. That you can take a decision probably for some buys and see. Of course, anything below the demand level would mean you're going to be pricing yourself or positioning yourself to take in some sell opportunities or some sell trades as well. Now that's as far as USD CHF or the US dollar and the Swiss franc are concerned. So away from that, I think we have one more currency pair. Then we do a bit of some indices. Then now we can go on to your questions and see what should want us look at. So let's have a look at this. So now this is the GBP JPY, and as you can see, GBP JPY currently we can use a line chart on this. Just a second. So now this is a GBP JPY, and when you look clear at GBP JPY, we do have some kind of demand level on the daily. The price happens to be around. So let's just mark this out this way. Remember that the line chart doesn't include the candlestick wicks, so you can pick the candlestick wicks directly from the candlestick itself. So you do have this whole demand level on the GBP JPY, and that you have seen it has been a bit bullish, especially even through last week. This is a full month, still May. Began May strongly bullish, and we had that retracement in between May and a bit of a push, of course, towards the end of May. So you can see that price has been a bit aggressively in sales in the past few days, especially coming into the close of last week. We had this aggressive sales to the downside, but now price is bullish, and we want to watch out for. So this area, what you want to watch for is probably confirmations of a price on a lower time frame, definitely shift to the upside. We want the lower time frame definitely shift to the upside, or if at all there's an extreme demand level you can be able to refine to, you'd be able to do that and match that level as well. But the aggressiveness you're seeing with the sales is not something you'd like to be around a lot. So having a confirmation kind of trade would be the best possible option. So you can set price into this 1 hour demand level and do a refinement. So it's an area you want to watch out for, probably get some kind of confirmation. So usually my confirmation pattern is something like this, just a shift always. When price is inside an area of interest, you want to see it offer you a shift to the direction of choice. And this is what a shift looks like. It's basically just price deciding to form new higher, new structure points over the direction. If price was selling, it gets into my area like this, then I go for like a 15-minute time frame. And the 15-minute give me something like this, because then I know that 15-minute time frame is going to start going bullish. And of course, when the 15 starts going bullish, later on the 30 will go bullish, the 1 hour, the 4 hour, and so on and so forth. So I want to stay from the low time frame to try and see price is going to push from the up to the upside. So that's my classic confirmation pattern as well. Oh, sorry about the echoes. I feel get a solution for them, but I think I'll work on them for the next session as far as the echoes are concerned. So these are the confirmation pattern that I tend to use as well. So something like this, what I want to look at when it comes to confirmations. So beyond that, you just first give me a second, I try out something and see if I can be able to get a solution to the equals short term here. All right, so shall I take a look into the equals in my next session? I think I'll probably get a Bluetooth microphone or something that has some kind of filter as well. So now onto the indices. Let's try to see what that has been. So now onto indices. Let's try to see what we can be able to have over here. So this is NASDAQ OUT 100 roll on the daily time frame. We do see we did have a kind of aggressive push on the daily candlestick from yesterday. It's a very solid candlestick as well. It's a very solid candlestick that you saw from there. Now going to a lower time frame, we would automatically anticipate today to be a bullish day as well. But of course, we have to first form the low of the day before price turns bullish within the same day. So let's see possible areas where price can probably easily turn bullish form as well. So let's see. We do have very what I call it bad price action. We have this kind of price action that price is forming as coming to the upside. Then now we can see price is slowing down, just around there, losing some kind of momentum. I've seen this push, but looks to have an obstacle, and now price is trying to push to the upside as well. So the buyer first and foremost is to be bullish on this through that day. Where is this? Okay, see this. So you can see the kind of levels that price is trying to respect at the moment. We have this resistance level that you can see. Remember, we marked the wicks out on my side. We mark these wicks here. We can see rejections. Price was giving us around this resistance level. We have 1, 2, 3 rejections. Then here, price did something similar. It came aggressively, pushed above, then pushed below this area. Came back and had some difficulty breaking above the area. Even after breaking above that area, it tried to retest a few times, then eventually pushed to the upside. Now you can see as right now, price has come in and has tried to break below this same area and it's having difficulty closing below this area, and we're seeing a rejection coming in. So usually people want to take a high risk trade in an area like that, but then it's not very advisable. So what we do, we tend to get this area being rejected, then we look for an intermediate high that we'd like to see price break out of, right? We'd like to see price break out of an intermediate high. Now here, the best possible solution, we want to see we have a consolidation happening here with its high over here. So if price breaks above the intermediate high over here, that's when you look for a retracement. It's the intermediate high. You want to see price break out of it on the 15 minutes. Then you can start retracement coming into New York session, then a push to the upside. That will make more of a confluence. You have a structural confluence on top of this area. Now, on top of this support resistance area, you can see that we have been marking on the 1 hour time frame. You can see we do have a demand level that aligns with it as well. we do have this demand level that aligns with that whole area. You can see from here as well, and price looks like it's respecting it. So the idea will be to look for buys after price breaks its intermediate high, offers a retracement, then a push to the upside. That's something you'd want to watch out for, and just entering from a support and resistance level because of the rejections. That will go more for an unplanned trade. Then adjust for a reference. You can start just below this area here. In case price fails with enough liquidity to break above, it can easily come back to this demand level over here, pick more liquidity, or take out this area as well. Then continue pushing to the upside as well. Then continue the pulls on a UT 100 or the NASDAQ index as well. So what other pair? So let's look at German 40 as well. So we do have German 40 or DE 40 roll as well. So let me just get the template on. All right, so this is a German 40, and look at the daily time frame. So generally the sentiment is bullish. The price action happening currently is not the best, but you can see a bullish sentiment, and so price did break out of these highs from March. Then price has been trying to do some kind of momentum or some kind of accumulation phase as it pushes to the upside. So currently we do have this trend line that you can want just to rely on, have a look at what price is doing. But similarly, you can look at just the pure price action on the candlesticks on where price currently is. So when you look at what's happening where price currently is, we did have this low being created. How should I mark this? We did have a low point that was formed over here. We did have that low point that price had formed. Then you realize that price did give us a breakout structure on this high over here that price gave out. So after price gives us this, the most ideal thing you want to look for is a retracement, right? But how far could the retracement go? Now there are many tools you can use, from the Fibonacci retracement tool to see how far retracement can definitely go as well. So sorry, let's mark this out this way. How much of this retracement can price come into as well? So you can have a look at this, and you want price to retrace into these areas below here. Now personally, when I look at this long rejection, I really like price to come to these levels here, basically because of the long rejection and its significance. It's really an area of interest. I like price to break to come to these levels over here. After having marked out these levels, you can even take off your fib as long as you've seen the 50% and the area below the 50%, or you can first go to like 1 hour time frame to try and see what kinds of areas of interest you can pick up within those levels. So if I'm to come and look at the areas of interest, now let me just get rid of this fib tool. Okay, so I'm going to get rid of the fib tool. So when I come to this area here, you can see that you have a demand level here, right? There is that demand level that price formed before pushing to the upside, and it's also below 50% areas. Now if I level out one price actually push all the way to, then I can now be able to look for buys to the upside. So you see this demand level, that was in the 1 hour, but you can see it aligns on the 4 hour as well, meaning it's a high probability demand level. So just a higher price, it's most likely going to retrace back into this demand level. And as I've just established, the demand level is also below 50% of the fib retracement level here. And not just that, you can also realize that our demand level is this area. Okay, that demand level also aligns within our 0.62 and 79% area as well. That gives you just more confluence and showing that you can be able to look for a confirmation within that area of interest, because it's most likely going to hold price. So these are just confluences, and now you can add them up whenever you're trying to formulate or to come up with a good trade decision as well. This on German 40, that's what I'm highly anticipating for to happen on German 40, and that's what I want to see. Of course, a break below this low would mean a push to the downside because we don't have any fresh demand levels all the way until down here. So close below this low here, price fall through that direction, we can push it to the downside. We can see it go all the way down that side. So I believe that's it for today. Let's just look at our US 500, and then I'll look at 1-2 questions, and then you can call it a day. So now coming on to US 500 or the S&P 500. So US 500 did see a push to the upside, and we're seeing price has been trying to show us intentions of coming to fill this gap, but the bulls have been so strong, right? They have been so strong. So we did see yesterday was aggressively bullish, and similarly today has begun with a correction move to the downside. So what we want to anticipate based on that bias, we're going to see a price push down into a good supply level. And if you remember just from NASDAQ 100, what happened? We did have these intermediate levels or aligned areas that are currently holding price, and we are seeing the same pattern trying to appear on US 500 as well. We have these aligned levels that are trying to hold price and see if you can push above. And remember, with these levels here, you're always going to align them probably with a breakouts or a support and resistance flip area like this, where price will reject multiple times, then breaks above and blocks a retest. So what we'll do will still be the same. If you want to look for buys of this level, you would look for an intermediate high on probably a 15-minute time frame that you want price to break out from first. And you're going to realize that this pair right now is having the same structure or the same kind of price action as almost as NASDAQ. So this will still be an intermediate highs that you want price to break above, then give you a retracement, and probably can be able to see price push to the upside from there. Then of course, anything below that, price will go down to the extreme demand levels that are down over here, then it can consequently now push to the upside. So that's as far as US 500 or what we want to S&P 500. So other than that, unless you have a few questions, then you can answer 1 or 2. Then you can see how the market plays out through the day and through the week. So yeah. So okay, someone asks for silver. So let's look at silver. So silver USD over here. So let's get that template. So now this is silver, and what you can see is price also on our time frame. Let's look at the daily time frame from there. So now with silver, the structure all aligning, or they look similar. You can see a big push from yesterday. Then you can see price push to the down, push the upside impulsively. So expect the retracement down into demand levels that can be able to continue the push to the upside as well. So now when you come from this, now with silver, we have seen that it has gone, I think, almost somewhere down this push that you're gonna beat down to the downside, but it's now pricing in bites and trying to push to the upside. So with silver, what I would like to do is I would have to have what they call a free zone. Off free zone, you can be able to buy above or sell below. Now I don't look for buys above this area. Then I would like to look for sells below this area. Basically, why I want to do that with silver right now is because we have no reason or we have no area on a higher time frame. That's why price is buying. Of course, when I put a 15-minute time frame, I'm going to find 10 to call them the informations. When you see these wicks happening with high momentum, you will tend to find this kind of areas on that 15-minute time frame. Areas like this, similar to aligned areas, as you can see, along with rejection as well. But these are not strong areas one to buy from. They're not strong areas for you to buy from. Of course, unless you take out intermediate highs like these. So if you're scalping, you can look at a buy above those areas, intermediate areas, intermediate highs like these ones here. because there's some big range above this. So for poor scalping, you don't see a break above this area, retracement, probably buy to this area here, but the best probable buys will be above those 1 hour areas because they will give you much more confluence and they'll give you a much bigger moves. You want to buy above this area and sell below this area, probably to this demand level if you're selling below this area here. Intraday, you want to look at a break above that intermediate high because in a higher time frame, price doesn't have an area it's really buying from. It's almost like a free space on a higher time frame where price just tend to buy. So that's as far as silver is concerned, and that's my outlook on silver. That's it. So yeah, that's my perspective on silver. Once you break above that, these are short-term moves, of course, then a retracement and a push to these levels there. Besides that, we really love to see a break to the downside, then a retracement, and then consequently a push to the downside. Those will be the 12 one see as far as today's trading sessions are concerned. Are any other questions? Letter code. So besides that, I would like to remind you that feel free to check out our free resources and materials that are offered on our YouTube channel. The novice to series. We do have our intermediate series as well. We also do have the Bullish Banter podcast with amazing episodes for you guys to watch out from. We do have classes that go on at Tanzania, Uganda, physical classes, and Kenya. We do have the online classes. So feel free to check the links in the descriptions and get yourself started. Don't have an account, please check the links still as well in the description. Create your account and trade with the best broker around. Other than that, I wish you guys the best trading day and a blessed week ahead of NFP. Yeah, so we meet next time.